Have you ever wondered how Warren Buffett, one of the world's richest and most successful investors, began his journey in the stock market? Our tale begins in Omaha, Nebraska, where Warren Buffett was born in the early 30s. From a young age, Buffett exhibited a knack for numbers and a keen interest in business. He was not your typical child, as he was more interested in making money than playing with toys. His first foray into the world of investment came at the tender age of 11. Yes, you heard it right, 11. While most kids his age were playing games, Buffett was busy buying stocks. His first investment was in a company called City Service, an oil service company. This early experience taught him one of the most valuable lessons in the world of investing: patience. As a teenager, Buffett was not just content with investing. He launched several entrepreneurial ventures, including selling golf balls, delivering newspapers, and even running a pinball machine business. These ventures not only earned him money, but also invaluable lessons in the practical aspects of running a business. Buffett's formal education in finance began at the University of Nebraska. It was here that he first read The Intelligent Investor by Benjamin Graham. This book had a profound impact on him and shaped his investment philosophy. Eager to learn more, Buffett then enrolled at Columbia Business School, where he had the good fortune to be mentored by none other than Benjamin Graham himself, the father of value investing. Under Graham's mentorship, Buffett learned the principles of value investing. He learned to see stocks not just as ticker symbols, but as pieces of actual businesses. He learned to focus on a company's intrinsic value and to buy stocks when they were priced less than their intrinsic value, a principle that would form the cornerstone of his investment philosophy. And thus, a young Warren Buffett, armed with Graham's principles of value investing, set out to conquer the world of stocks. Buffett's investment strategy is simple yet profound, but what exactly is it? Let's delve into the genius of Warren Buffett's investment philosophy. At its core, Buffett's philosophy is rooted in the principles of value investing. This means he looks for shares in businesses that are selling for less than their intrinsic value. In other words, he seeks out companies that are undervalued by the market. So, how does he determine this intrinsic value? Buffett often looks at the fundamental aspects of the business, such as its competitive advantage, management quality, and its potential for growth. Buffett also emphasizes the importance of understanding the business you're investing in. He often states that he won't invest in a business that he doesn't understand. This means that before making an investment, he thoroughly researches and understands the company's operations, its industry, and its competitors. Another cornerstone of Buffett's philosophy is his preference for long-term investments. He is not interested in quick profits or short-term market fluctuations. Instead, he buys shares with the intention of holding on to them for a significant period of time, often indefinitely. He famously quipped, "Our favorite holding period is forever." But why does he prefer long-term investments? Buffett believes that the real value of a company is realized over a long period of time. He argues that the stock market can be irrational in the short term, but in the long term, it accurately reflects the intrinsic value of a company. Moreover, Buffett's investment philosophy is not just about picking stocks. It's about picking businesses. He doesn't see himself as buying shares in a company, but rather buying the company itself. He looks at each investment as if he were buying the whole business. This approach forces him to think about the long-term potential of the company and its ability to generate profits in the future. In conclusion, Buffett's philosophy isn't just about picking stocks. It's about picking businesses. It's about understanding the value and potential of a company for the long haul. It's a philosophy that has proven successful time and time again, making Warren Buffett one of the most respected and successful investors in the world. Berkshire Hathaway, a name synonymous with Warren Buffett. But how did this association come to be? Let's take a journey back to the mid-20th century, when our protagonist first crossed paths with the company. Originally, Berkshire Hathaway was a struggling textile company. It was far from the investment powerhouse we know today. But when Warren Buffett saw the company, he didn't see a failing textile business. He saw an opportunity. In the early 60s, Buffett began buying up shares, eventually taking control of the company in 1965. Now, you might be wondering why a man like Buffett, with an eye for value, would invest in a struggling textile company. Well, he saw beyond the surface. He saw the potential in Berkshire Hathaway as a holding company for his other investments. And that's exactly what he transformed it into. Once Buffett had control, he began to steer the company in a new direction. He moved away from the textile business. which was eventually phased out, and began to use Berkshire Hathaway as a vessel for his investments. This was the birth of Berkshire Hathaway as we know it today, a multinational conglomerate holding company. Over the years, Berkshire Hathaway has held some of the most notable investments in the world, including big names like Coca-Cola and Apple. These investments haven't just been successful, they've been phenomenally so. They've propelled Berkshire Hathaway to heights that few could have imagined when it was just a struggling textile company. Berkshire Hathaway's success was not a matter of luck or chance. It was a testament to Buffett's investment philosophy, value investing. This approach involves buying securities that appear underpriced by some form of fundamental analysis. It's a strategy that requires patience, diligence, and a keen eye for value, qualities that Buffett has in spades. Under Buffett's leadership, Berkshire Hathaway became a testament to the power of value investing, forever marking Buffett's name in the annals of investing history. And that, my friends, is the story of the Berkshire Hathaway era. So, what can we learn from Warren Buffett's success and his views on the stock market? Having navigated the tumultuous seas of finance, Buffett's journey has taught us invaluable lessons. His investment philosophy, deeply rooted in value investing, teaches us to seek out undervalued companies with great potential. This strategy is not about quick profits, but about long-term gains. It's about seeing the forest, not just the trees. Furthermore, Buffett's success underscores the importance of understanding the business you invest in. It's not just about the numbers. It's about knowing the ins and outs of the company, its industry, its potential for growth. Moreover, Buffett's humility and continuous pursuit of knowledge are truly inspiring. Despite his immense success, he never ceased to learn, to grow, to adapt. His belief in continuous learning is a reminder that in the world of investing, complacency is your worst enemy. Warren Buffett's success is a testament to his investment philosophy, a philosophy rooted in patience, value, and a deep understanding of business. As Buffett himself said, "The more you learn, the more you earn."